Hi guys, I'm Harry Yotis. I've been a professional trader for 20 years now. I started working for National Bank Financial, one of the big six banks here in Canada, in 2005. And I've been trading my own account for the past 10 years professionally. So having said that, let's get started with today's daily market update for Wednesday, the 19th of November, 2025. Here we go with the S&P 500. This is Wednesday. We've had a good day. It was bid up. Technically speaking, let's get the moving averages in the game. So technically speaking, we mentioned a couple of days ago that because on Monday we closed below the 50, that this big uptrend was broken, and now we're in limbo. We don't know. This is like the trend is in pause. It's not a downtrend yet, but so far the trend is in pause. Okay. So what we want to look at if we're bullish, and I am bullish going into the end of the year, is a quick recovery above the 50. So just because you broke the 50 for 1 or 2 days is not a big deal. I mean, we looked in the past. You can break it here for a couple of days before going back up. Here it gets broken for a couple of days. The 50 is the red line. Here it gets broken, stays there for weeks before going up to highs again. It's a big move, by the way. So, I mean, it's not a death sentence. It just means that we're on pause for now. It could turn lower. You don't know. And going forward, technically, this was a lower high, so that is a feather in the cap for the bearish guys out there, the bearish trend. However, it's not over. Like, we could still, if we go higher here, we could have a double bottom if it breaks the 685 level here, if it continues to go higher. So you don't know. Like, just looking at technicals is not enough. You have to look at the fundamental picture, okay? And I like to pair the technicals with the sentiment index, sentimentality, to see how far stretched we are. Are we at extremes? Yes, we are. Extreme fear, and still, like we mentioned yesterday, extreme fear on all the sub-indices, except the market volatility ticked down a bit, I should say. Meaning that the VIX here ticked down after going up to like over 25. So over 20, 25, this is extreme territory. And I suspect that it will continue to fall down because I am bullish till the end of the year. So we had this move in SPY, a big move. Well, it's not that big. What are we down? 4%, 5, not 5, maybe 3 to 5%, let's say, with extreme fear. Okay, this means that everybody was scared that the AI bubble is dead. Okay, so what happened with the AI bubble? We had a couple of what would you call it? Minefields that we had to get through if we're bulls this week. Okay, the first one was like we had NVDA and then the jobs report. So the jobs report, we could just get rid of it right now. Look, the government cancels the October jobs report because it can't calculate unemployment and other key numbers. So that's off the table. Minefield number one gone. What does that do for us? Well, it leaves us with minefield number two, which is, let's get to it, NVIDIA. So what happened with NVIDIA? Today was the big day. Today is the day that I announced earnings. As you can see, earnings came in, like you have to look at it here, like you get the report here, the news, but you have to look at it on the right side of the margin. NVIDIA's record-breaking Q3 fiscal 2026 financial results. You can see revenue of $57 billion, up 22%, and up 62% year over year. Gross margin 73.4%. Net income, I mean, you can go over this, but the most important thing is here, EPS 130, and they're expecting, I think, 126. So they beat, like the expectation was 125, 126. Okay, so they got 130. So they beat. And as you can see, this blue line denotes the post-market activity. It's ripping. It's at 193 post-market from 186. So that's great. This is going to be very, very good, okay, because everybody and his mama, we said, was positioned short. So this should be good for the market, alleviating the potential AI bubble is about to burst fears. You had Michael Burry, you had all these negative news reports that we kept mentioning that, the AI bubble is dead, the market sucks, it's going to tank another 20%. This is very good. I think this alleviates the one-sided massive bearishness here, extreme fear, and I think this will power the market to at least neutral to greed going forward. Okay, so minefield number one, which was the jobs report, off the table. Minefield number two in our favor as bulls. So the S&P 500 now will probably go up, will probably be bid, okay, because this is when you have this kind of extreme negative sentiment and extreme positioning with puts. We saw the put call ratio was at extreme high levels as well, that you're going to get a rebound. Now the key is we don't know how high of a rebound. Will it rebound below and peak below this high? Then that's bad. Okay, but if we break this up and go even to new highs, which I suspect we might, because this is still my target between 700 and 720. Doesn't have to get there, but I mean that's just a target from the beginning of the year. Then if it breaks this 685 level, we're going to have that double bottom formation that we were suspecting, that we were hoping would happen as bulls. Okay, so don't just look at the technical picture. I mean, this is what we can expect going forward. You have to look at the fundamental and the positioning as well. Okay, and so far the positioning is very bearish, and we're expecting it to go much higher going forward. So what other big news came out today? Well, we had a couple. We had this theme that I like to point out. MP Materials, which is a play that we have going on. The stock surges because they have a deal with Saudi Arabia to develop a refinery, rare earth refinery, and Pentagon backed. This is great because this is the critical metals play that we keep harping on. And our play for critical metals, one of them is MP. Okay, and I put a little little notes here on the chart to prepare us, to give us a recap of what we did. Okay, as you can see here on Friday, the November 7th, we got in, we entered long on a bullish engulfing around this area here. We did it with an option structure, and this bullish engulfing led to a high here. Okay, and we were hoping that this past week that it forms point number 2, which is a higher low, and that looks like it did, because after this news, MP blasts higher. So this might be the second leg. The third and most important thing is that we must close above this high sometime in the future. This will increase the odds that this is this up move, the next up move in this, critical minerals, or I should say rare earths play. This is the leader, so you want to play the leader. The critical move would probably go even higher. Maybe it reaches to the hundreds, hopefully before January. Okay, so far our MP trade is looking good. And the key thing here is Saudi Arabia, because that brings us to the second point that happened today, is that Elon Musk's XAI partners with Saudi Arabia-backed Human, I guess, to build a 500 megawatt data center with NVDA. Okay, so if you read this article, you will see that Elon Musk announced plans for XAI to build a 500 megawatt data center in the Kingdom of Saudi Arabia. This is big because beforehand, you will note that Donald Trump has bans on NVIDIA chips going forward, strategic chips, okay? But the Trump administration here, this is the important part. Trump administration is prepared to approve sales of high-end NVIDIA chips to Humane, clearing the way for Saudi Arabia to accelerate its AI infrastructure plans. This is cool. This is key as well, because not only do we have the AI bubble not bursting, it's expanding, okay? Saudi Arabia enters the picture as a player, okay? And this Saudi Arabia entrance into the game is huge because it adds another element to the critical metals play, okay? Saudi Arabia has been proven to be a very good supporter of the United States in terms of moving these deals forward. And yesterday we mentioned that they announced, Saudi Arabia and Trump administration announced $1 trillion investment into the States, okay? But it didn't move markets at all because the market didn't know how to interpret it. But now we're seeing the picture of how it could develop, okay? Saudi Arabia is going to help Trump with his critical minerals play, and Trump is going to help Saudi Arabia with the AI play in the future. It's a quid pro quo. So we see that the Saudi Arabia deal could become like a mini theme going forward, okay? So this is very good news, not just for the AI, but for the critical minerals play as well, okay? Our themes are getting oxygen, okay? A lot of news flow is getting into our AI theme. It's getting into the critical metals or minerals theme as well. This is very, very key. So what else came out today that is of note is the FOMC minutes. Okay, the FOMC minutes came out and exposed that the Fed is iffy on whether they're going to cut rates in December or not. So we look at the Fed Watch tool and we see that. Remember yesterday we looked at it and it was 50-50 chance that they were going to, this is a December meeting, that they were going to cut rates in December. Well, now that 50-50 has dropped to 1/3 cut and 66 standing pat. So this is worrisome, but not so much because we don't really need a rate cut to make the markets feel higher. But it would be nice if this started changing as we go forward. Unfortunately, we saw that the government cancels the jobs report, so we don't know whether bad jobs would force this ratio to go much higher. The not ratio, but percentages to go much higher in the favor of the rate cut camp. Okay, so we don't know that yet, so it's a question mark. So that, remains to be seen. We have to look at what's going on here, although this is not a deal breaker for our bullish SPY thesis going forward. Okay. So to reiterate, great news by NVDA. You can see the NVIDIA stock post-market is trading at 194-ish right now from 186. This bodes well for our SPY bullish thesis going forward, thanks to extreme fear positioning and sentiment across the board, the put-call ratio, extreme fear. Everybody was positioned for, Armageddon. That's why as traders, you want to go the opposite. You want to fade the extremes, okay? Generally speaking, you go with the trend, but when it comes to extremes, especially when this is a counter trend move, we're actually going with the trend, with the bullish trend, okay, by being contrarian bulls in this bearish sentiment and recent bearish drop in SPY. So thanks for watching, guys. I guess we'll see you tomorrow with another market update. If this helped, please like and subscribe, drop a comment, and I will answer your questions as clearly and as efficiently as I can. And remember, this is not financial advice. This is just for education purposes only. And I'm looking forward to tomorrow's daily market update. Later, guys.